From futures and options traders. We're here every day to give you strategies not just on how to play the index in a more leveraged fashion, but also how to take stock-specific choices and play the stock market in the F&O space. Before that, let's take you through a disclaimer from our end. You need to consult with your individual financial advisors before taking any positions in the futures and options space. We've got both of them ready with us. Thanks a lot for joining in, Dr. Narayan as well as Nitesh. Let's start off with you, Dr. Narayan. First, on the kind of moves we've been seeing on the Nifty, strength coming back once again into the markets, and like everyone's been talking about it, it does not seem to be dying down anytime soon. Maybe slight consolidation, but definitely not on the downward side.
Yeah, indeed so, Devina, because I think post-expiry we were all thinking that perhaps, after the pretty frenetic movement of the last week, the market would actually seek to cool off a bit, but it really doesn't seem to have any of those kind of intentions. And 5700 was tagged in the morning of Friday, after which it fell back. But, trading of today really depicts, absolutely no sense of weakness. Okay, we have not had any tearing upward moments like we had last week, but I think the sort of willingness of the market to hold on to higher levels would probably indicate that, enough people are out there willing to buy the market, or vice versa, nobody is wanting to sell this market. So most certainly, strength is certainly being fairly exhibited by the market.
It's interesting, Dr. Narayan, how we are seeing the higher strike calls, particularly even 5800 today has got very active. 17% addition in terms of their open interest positions on 5800 and a 29% jump up in 5700, whereas 5600 put is now starting to act up and create a base for itself.
Yeah, I think it's not unusual to see near the money strikes adding OI as we move into the month further and further. But interestingly for this month, if you've seen it on the day of the expiry, the largest OI concentration was very, very small band between 5600 on the upside and 5400 on the downside. But then a couple of days later, the band has really widened. 5800 is where the OIs have really stacked up for the call side, and 5300 is where the OIs have stacked up for the put side. So the market seems to have made a much wider range for July, much in ahead of the month, which is very interesting. And I think that is what really sets up the kind of strategy for the month that I have. Well, I wouldn't go as far as saying that is for the month. It's more for the week, I would think. I would be looking for what I said earlier, the frenetic kind of action that we saw last week. And in spite of the show of strength, I think what we will see is a shift of the action to, let's say, the second level set of stocks, maybe the mid-cap segment as a whole, the mid-cap segment in the futures area, whatever. But I think the index overall might halt a bit. So what I'm recommending here is a 5600, 5700 strangled short. This is slightly aggressive as a trade. It will get you about 150 rupees by way of premium, which covers you up to 5450 on the downside and 5850 on the upside, which is pretty much where the range of the month is also indicated for me. I don't think it will go much below 5450. So even in the worst case kind of scenario that I sort of think of right now, I think this range will keep me fairly safe. So a 56-57 short strangle is what I recommend at 150 rupees premium inflow. We will look to take this off if there is a 50 rupee erosion in the premium value.
Alright, so viewers who have been tracking us since we started would obviously know why we are using the short strangle in order to play a range, like Dr. Narayan pointed out. And you're playing both the call and the put. You're going short on the 5600 put and you're going short on the 5700 call, which is why you're getting a premium inflow of about 150 rupees. And when you take that off the range of 5600, you minus 150 from that, you get your lower bottom range of 5450. And if you add that on the top to 5700, you get your upper limit of about 5850. Individual stocks then, and Dr. Narayan, let's take yours first. You've got Sri Lanka Sugars, we just spoke about that one, and GTL, as well as your other updates.
Yes, I think there is some bit of news on sugar stocks, and they have been placed reasonably well on the charts. And I think the way maybe Renuka has moved It's been ahead of the pack, the usual set of 4 leader stocks and futures. I think Renuka has been much ahead of the pack, shown the highest amount of upside momentum. It is a little away from where the safer zones for buying are, so probably I would like to play it with a long call. And I would like to play it with an OTM call. Let's say we would look to buy an 80 rupees call, because I think the share has the potential till about 80-82 rupees for this up move. So I would like to buy an 80 rupees call, which should be trading at about 1 rupee, 1.1 thereabouts, and look to hold it. I think that's a small amount of money to pay for taking a position. And if the call goes well, it should trade at about 4 to 5 rupees this thing within the next set of few days. So long trade in Renuka using the 80 rupees call. I still feel very bearish on GTL. I think their troubles are far from over. That's trouble for the stock. I think is far from over, and we should see, I think, maybe continued pressure on GTL. It has rallied up from about 89 levels, so 100 rupees. That was about a 38% retracement. I think most of these shorts got closed out there with the last month and the start of this new series. So I think I would still look to short GTL at about 94, 95, 96 levels and look for a target around 85 levels. This would be a trade across some 5-6 odd sessions. So it's a slightly, not just a day trade or a, let's say, 1 to 2 day trade, but maybe a 6 to 7 day kind of trade with a target less than 85 rupees. And as an update, I think I had recommended a short LIC future on Friday. I don't think that trade is doing very well. It's trading at about 242 the last I saw it. I would suggest that the short trade, if it has been taken, should be removed. You should enforce the stop and close it out.
Alright, so exit the LIC Housing Finance July futures, the short position. But take another short position in GTL, GTL July futures, as well as going long on Sri Renuka via the calls, buying the 80 strike call. Dr. Narayan as well as Nitesh Thakkar, thanks very much both of you for joining in on this leg of the FNO show. We'll come back and discuss the more strategy.